where America goes for funding. Give us a call, text Angelo Christian 832-431-6331, your direct nationwide lender. Been doing it for over 20 years, helping Americans accomplish their dream to achieve capital, real estate funding, buying their home. We do nationwide commercial, residential, and private lending. You can reach us at 832-431-6331, or you can go on our link down below to get signed up to enroll. There's no cost for enrollment. There's no hard credit check. There's no contract. We're open 7 days a week, and we can reach out to you and help you. We do our weekly show here where we talk about real estate, credit, markets, political, stuff that's going on in real estate and finance. And this is what I've been doing my whole life after I got out of school 22 years ago. So we opened the business in 2005 and serving people all over the country. We've helped hundreds of thousands of people and lent billions of dollars. So we're very honored and privileged to be able to help and service you guys. And I appreciate all of the support on the channel. Just give us a big thumbs up, shout out. Don't forget to subscribe, enable notifications, share this information with, hey Brian, what's up, man? Thank you so much for watching. Don't forget to share this information with anyone that'll get value from the show and the channel. We really appreciate all of your help and your support. So, and if you guys have any questions, please ask me any questions. Hey, Basketball Grant, how you doing? If you guys have any questions, feel free to ask me down below. I'm happy to answer anything that that you guys have on your mind too. Like I said, we've been lending for over 20 years. A few things I'm going to be talking about tonight is non-QM loans, the future of non-qualified mortgages. What exactly is a non-qualified mortgage? How to boost up your credit score. HELOCs, lines of credit versus the HE loan. And then also where interest rates are at right now, what's going on in the market, and how you saw, yesterday the Federal Reserve, they left the interest rates unchanged. And Jerome Powell said that, basically that Donald Trump doesn't have any influence, on interest rates, even though Donald Trump is the guy that hired him. I know Donald Trump is very adamant about getting interest rates lower and replacing Jerome Powell. So I think that, ultimately interest rates are going to be heading down and going much lower in the next 24 months. It's just a matter of when and by how much. I'm thinking like a slow trickle down effect, unless there is like a major catastrophic change in the market. I'm expecting, a pretty good drop in interest rates, but like a stair stepper down. Thank you guys for watching. Appreciate Michael. Thank you for tuning in. Appreciate if you guys just give us a thumbs up. Share this with anyone that you know that will get value from it. So the first thing I'm going to be talking about tonight is the non-qualified, the non-QM loan. What exactly is a non-qualified mortgage and why is it here? So basically after 2008, the Great Recession, Depression, the crash, Barney Frank and Chris Dodd replaced Powell, Barney Frank and Chris Dodd came up with a bunch of mortgage laws to kind of revamp everything, including the CFPB, a bunch of stuff to change finance forever. And they came up with the standards for a qualified mortgage as a conventional loan, and they had to have very strict requirements to adhere to qualify. But what happened from that is entrepreneurs, investors, because there's always somebody that's trying to think outside the box, created a non-qualified mortgage. Okay, so this is a qualified mortgage, a conventional loan. This is what's going to be called a qualified mortgage. So let's create a non-qualified mortgage that doesn't require all this crazy underwriting and all this nonsense. And it's going to be easier for people to get a loan. Like, for example, if you get paid by Uber, DoorDash, you get paid by cash, you get paid by bank statements, you get paid by the mile, you get paid by the load. None of that is really acceptable for conventional qualified mortgages. So if you had a bankruptcy, if you had bad credit at one time, if the property needs rehab, so that's going to be very hard to get a loan if you have that type of situation for a conventional bank loan. So non-qualified mortgages were created. So this great thing, and from all this chaos was created, a great thing. And with that, people can buy homes with bank statements, no documentation, pay slips, profit and loss statement. So they have many different ways. Uber, Cash App, Venmo receipts, Bitcoin, all these different things that make a lot of sense compared to just trying to get a loan as a conventional way with tax returns and W-2s and pay stubs. The other thing is that what's the big difference is that it's not a computer that approves you, and you don't have to have 700 credit score. You can have a 500 credit score, you can have a 600 credit score, and it's a person, a human being underwriter that actually approves the loan. So it makes it a big difference on the qualification because a person can go get, think outside the box. It's not a computer AI making the decision to see if you're going to get approved for the loan. So that's how non-qualified, non-QM loans have been created. And now, since 2008 till 2025, it's grown into a multi-trillion-dollar market. The market share has increased by over 38% since 2008. And my opinion is that in the next 20 years, that it could easily trump conventional lending because it just makes so much more sense, and the interest rates are very close to standard conventional loans, but with 60% less requirements to get the loan. So that means a lot if you really think about it. Anyway, the big thing that with not inside the non-QM world, what can you do? You can buy your home if you're self-employed up to $10 million with no tax returns, no W-2s, no pay stubs. You can get a mortgage down to a 500 credit score. You could have been laid off from work or been out of work, and now you're starting a new job. Maybe you had a gap of employment. Maybe you were working for a company and then you started your own business, and you don't have 2 years of self-employed. With non-QM, you can get a loan with just 1 year self-employment, or you can even get it with just a few months self-employment if you're in the same line of work. Like we see this all the time. Like truckers work for a company and they're W-2, and they leave and start their own rig and they become 1099. Well, if you're in the same industry for 2 years, you get all that credit, all that qualification from the time that you're W-2'd as a truck driver and the time that you're 1099. On a conventional loan, you would not be able to do that. You'd have to have 2 years self-employed to qualify as a truck driver with a conventional loan. So the point is that it really thinks outside the box. Let's say that the property needs a new roof and it needs a new foundation. A conventional loan is not going to let you get the loan if you got that situation. Well, with a non-QM loan, you can add the repairs for the roof or the foundation into the loan. And then you can buy that house and get it fixed with a contractor. So there's a lot of powerful things about non-QM. And the thing is that I'm not trying to sell anything to anybody. I'm just trying to educate you. So, because we do conventional loans, we offer them. Oh, you're welcome. I appreciate you, Henry. Thank you so much for tuning in and watching the channel. That means a lot to us, man. And I hope that you and your family are doing okay. And we're honored and privileged to be able to serve you guys. So Henry's, one of the hundreds of thousands of people that we've helped to get funding for their home. And we do everything from helping first-time buyers, veterans, ultra luxury, developers, investors, entrepreneurs. We do it. We have no, line in the sand. If it makes sense, and then we'll figure it out to get it done. That's the cool thing about our company, is that we work really, really hard to come up with solutions, come up with game plans to get it done. Maybe someone, we talk to people every day, they're a little light on the credit. They need a little credit boost to get up, and we can help them to boost up their credit score to qualify to get the loan. That's a big thing that we do. And a lot of lenders don't want to mess with that because they think it's too much work and they just want the easy stuff. Well, everybody is, if everyone had it easy, then no one would be great and no one would push themselves to do better things. So we like to do things that are creative, outside the box, niche-y, that are more complex. So that's what we specialize in. And so, of course, we do conventional loans. We have low interest rates and all that stuff, and we're honored to have that. And there's no issue with that. So I'm just saying that outside of that, we also are very good at taking care of business and getting things done. And we push to figure it out, like Henry was saying, where other lenders are saying, no, it's too tough. You were, on workers' comp, now you can't get a home loan, or no, you've been 3 months out of the job. We try to push to figure out how to get you approved, how to get it done. So that's the big thing with our company, and what really makes us, thrive is problem solving. And a lot of lenders do not like to problem solve. A lot of lenders just want the easy money. There's nothing wrong with that, but that's not really as abundant. And to us, that's not really doing God's work, trying to help people out and figure out how to, because everybody that's hardworking, should be able to deserve and own a home. Whether you have a real job or you're retired, you should be able to own your own home. That was one of the biggest gifts that I gave my mother before she passed away, was building a house for her. And it was the first time she ever owned a home in her life. And she was the happiest person ever since she got to own her own house before she passed away. So that's a big thing for me, to be able to help somebody to accomplish that. And it doesn't have to be just me. It could be an investor trying to build a 200-unit apartment complex, which we do. We cater to those type of clients as well. Trying to help that person to solve the problem, to get it done, to figure it out, is a monumental thing. So anyway, that's kind of the situation on non-QM. We offer those nationwide, by the way. The other big product inside of non-QM is the DSCR. You guys have heard this loan, DSCR. We talked about it in depth last week. Debt service coverage ratio, investor cash flow loans. You can buy unlimited rental properties. You don't even have to have a job. You can close in your LLC, and as little as 15% down if you're purchasing. If you own the house, you can qualify cash out, no seasoning, asset-based. If you don't have good credit, or if you have great credit, that's great too. But you don't need employment, you don't need income, you just need the cash flow of the property. We have bridge loans inside of that for fix and flip. Fix to rent is a big thing right now that a lot of investors are doing, because they don't want to sell the properties, because land is becoming more and more scarce. So that's a big thing too, is the fix to rent. I don't know if you guys have seen that or heard about that, but it's a very popular thing right now. But we have like a lot of different programs that we do. We help a lot of first-time buyers that with FHA. We even have an FHA zero down duplex program that a lot of people love, that's very popular. If you have a 620 or higher credit score, you can buy a home with FHA with 5% down payment assistance, and there's no income limitation. So you can make whatever, $1 million a year and still do an FHA loan. Now it does have to be your primary residence, so you have to live in one of the units, but there's no location restriction either. And you do not have to be a first-time buyer for that program. That's really, really cool. The other thing that I like about it is that you can get up to 6% for closing cost from the seller, or you can put them into the loan. So virtually you can buy the home with no money down and get 100% financing. The only thing you pay out of pocket for is like your appraisal. It's like $700. The insurance is probably going to be about $2,000, and then your inspection will probably be about $300. So you can basically, oh, thank you. Oh, you're welcome. I appreciate you for tuning in and watching the channel. I hope that you're getting good information, good content from it. We work really hard to be able to educate people, empower them, get them the knowledge, so that way they're aware of how all these loan programs work. A lot of people don't know how these loans work. They're very confused. And so we educate you, we walk you through it so you can get the knowledge, so you can get the information, so you can be successful. Whether you're trying to buy your primary home or you're trying to build 100 units, we want to be your lender for finance. We're your source. So don't be a stranger. Please reach out to us, so whatever we can do. Don't forget, call, text my office, 832-431-6331. We've been doing it for over 20 years, guys. So we work incredibly hard. We're not perfect. We do make mistakes, more than I want to admit. but we own up to it, and we'll work hard to figure it out and fix it. So yeah, I appreciate you guys giving us all the support. But yeah, the FHA Zero Down is a great program. If you know someone that's trying to buy a house, they have a great job. They can afford to pay a mortgage. A lot of people, they get intimidated because bankers are usually, or mortgage lenders are really stuck up, and they're normally rude. So they don't even want to talk to you to begin with. We're not like that. We have more of an open arms type situation where we want to try and help you, because that's what we do. But the other thing is that we are going to try to figure out what we can do to help you. Like, for example, we go down to a 500 credit score with FHA and VA. A lot of people don't even believe that's true or that's even real, because most lenders will not do that. Most lenders won't touch you if you don't have a 620 or higher. That just tells you like how we are, because the FHA and the VA actually don't have a credit score requirement. They allow the lender to make that decision on what score they're going to lend down to. So my point for bringing that up is because we are super aggressive, we do care, and we try to help people out. We've helped thousands of veterans and first-time buyers with below a 620 credit score get the loan for their house. Okay, so of course we do good credit loans too, and we love to work with people that have good credit. I'm just saying that, if you maybe have a great job, maybe something happened with your credit a long time ago, maybe a divorce, you lost your job, maybe you got sick, and now you're trying to bounce back. Well, that shouldn't be held against you. Your credit score should not determine who you are. Things happen in life. There was a time in my life when I had a 500 credit score, but I turned it around. Now I have an 800 credit score, but I had to work hard at that, and I had to change things in my life. And so, you never know what's going to happen tomorrow. All you can do is control how you're going to respond to it, how you're going to deal with it, because things can get hairy, they can get messy. And so you want to have a safety net, and obviously a good credit score is, of course, that's a great thing, and I want you to have a good credit score. The thing that I'm getting at is sometimes what I tell people is, date the loan, marry the property. You might not be on that loan for more than 6 months or a year. So use that loan short term to get what you want, get the house. You might pay a little bit more interest, but in the long run, you own the house, and the equity appreciation in a home will always rise faster than the interest that you pay. So always remember that, especially in hot states like Texas. In Texas, the average equity appreciation in real estate has been 38% for the last 5 years. You're going to pay on an interest rate 5 or 6%. So which one's greater, right? So that's how you have to look at things: the cost, the cost benefit analysis, and the ROI. What makes more sense? So just keep that in mind. So, and don't forget, guys, if you want to learn more about real estate, maybe you want to make a career change and get involved in real estate, we have Real Estate University. That's our platform that we build. There's links down below to get into Real Estate University. It's an online platform where you learn how to become a top producer, a top closer. So check out Real Estate University. Yes, Henry, you can get a second loan. That's not a problem. Yeah, you definitely can get a second loan on a different property. So the other thing I was going to say is that if you want to become a loan partner and get paid for your referrals, you can get signed up with Angelo Christian, our loan partner program. So we have a loan partner program where you can actually get paid for your referrals. That's a really cool, hot program too. So check out the Angelo Christian. So basically, if you have someone that maybe you're a broker, or you're a loan officer, or whatever you do, and you want to refer a business over, if you refer customers to us, we'll sign you up with our loan partner program. You don't have to do the process, and you can if you want. You'll get paid more if you do, but if you just want to refer it over, then we'll pay you for that referral. So just keep that in mind if you want to learn about our loan partner program. Yeah, Henry, we can definitely help you with a second home in Florida. There's a lot of programs. There's conventional, there's FHA, USDA. If you're a veteran, you can do VA. There's private, non-QM, no doc. So we've got a lot of different options of what we can do to help for sure. Yeah, please reach out to us if we can help you with that. So you can, yeah, definitely call or text us. If we can help you, 832-431-6331. We'd love to work with you to help you to get that going. Thank you. Yeah, so there's a lot of things that that we have. That's not just lending that we do here. We also help with the real estate university, and we also help with our loan broker partner program too, to pay you guys for the referral program. So I appreciate all of you guys tuning in and watching the channel. It means a lot to us to be able to help you to solve your problems, to get it done. We've been actively doing it for over 2 decades and helped tens of thousands of people, all over the country. So, and then don't forget too, if you want to get, if you're a customer of ours or a partner or a vendor, don't forget we have our free Amazon giveaway. You can go online to Angelo Christian Mortgage on Google. Go to Google, Angelo Christian Mortgage, and leave us a 5-star happy review because we've done business with you, or you're a partner or a vendor. Thank you, Henry. You're amazing. We're here for you, Henry. Thank you so much. But if you go to Google and leave us a 5-star review, we'll give you a free Amazon gift card with Angelo Christian. And also, don't forget tonight we do have a giveaway that we're doing for a free Amazon gift card. So in the show, I said something earlier. I want to see, test your knowledge if you were listening. So so let's see. So I just want to make sure you guys are all listening to me. If you're still watching, you're still here. I don't know if y'all are still here. We're giving away a free Amazon gift card. You'll text me at 832-431-6331, the winner, and then you'll get that free Amazon gift card. So tonight I asked a question. There's a cost-benefit analysis between equity appreciation and interest rate. So who remembers what those percentages were? So I said this earlier about 5 minutes ago, that there's a relationship between the equity appreciation in real estate and the cost of the loan. So who remembers what those percentages were? Whoever answers that correctly will get the free Amazon gift card. So does anyone remember what those percentages were? And what does it mean? And more importantly, what does it mean? Because that's really what the main thing is, understanding the ROI between equity appreciation and the cost of it. Oh, you got it, Mike. All right, Mike, you get the gift card, man. Text me your email and we'll give you the free gift card. Mike's a good listener. Yeah. Text us your email address. We'll hook you up with an Amazon gift card. Thank you. I'm glad you, yeah. Smart guy. But basically all it means is so here's the bottom line is that, okay, if you're going to buy something and it's costing you $10, okay, there's a cost, it's costing you $10, but if you can make $90, that's a good exchange, that's a good trade, right? If I'm going to give you 10 and you give me 90, so that's the point I'm trying to make, because people are like, well, I don't want to, buy another house right now because the interest rate's 6%. And my argument is that you can't afford not to buy the house because you're losing more from the appreciation of the real estate. Like if Henry buys a property in Florida, Henry spends $300,000. In 10 years, that property is going to be worth $500,000 or $600,000. So he's going to double his money. So that appreciation he's going to get from the house is going to be like 35%, versus he's just paying 6%. You are smart, man. You're a great guy. So, you paid attention. Most people don't pay attention. So I got to give you that, man. That's good. So I appreciate all of you guys tuning in and watching the show on the channel tonight. It's been an absolute pleasure. So thank you. Yeah, text us or email, get your free Amazon gift card. And then we'll be back again this weekend to do our second round of our live show. Thank you guys so much. Take care. God bless. Stay strong. Don't forget to leave us a 5-star review to get your Amazon gift card. Thank you so much. Take care. Later. Bye-bye.